Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I would like to take a look at a brilliant example of what I call my holy grail setup on a 3-minute chart of the DAX that unfolded yesterday. That's February the 28th. So I want to go through the steps that I was looking at to highlight this. To start with, we should always look at the larger degree support and resistance zones on a 15-minute chart when we're looking to trade on 3 and 5-minute charts. So here's a 15-minute chart of the DAX going into February the 28th. As you can see, we have the market declining down, so let's put the support zones on. So for this we use our decision point tool, we choose swing high or low. Here's the last pivot low, we click on this. As you can see, the market's found support here. However, as we go into the start of February the 28th, which is here, the market's gone through this, so we then look at the next level. So again, we repeat the procedure, click swing high or low. Now we go back to the last pivot, which is here, and as you can see, it puts this decision point support on the chart before the market even gets there. That's important, that these levels are on the charts in advance, i.e. before the market gets to them. In other words, they're leading indicators. So let's see what happens as the morning of February the 28th unfolds. Well, the DAX drops into our 15-minute support zone and then starts to make a rally up. So as a trader, we know that because it's a 15-minute support, we can classify that as a major support zone, and therefore now look to the 3-minute chart to see how the market unfolds after this. So okay, just to recap, 15-minute chart has found support at a decision point and is now rallying off that decision point zone. Here's the 3-minute chart, and what I want to do is first put that same decision point support on. So we'll just click on this, and the actual pivot that we click on is this one back here, because this equates to our 15 minutes low we had on our 15-minute chart. And again, here's our same decision point zone, the same position we had before, i.e. the market had declined down in the morning of February the 28th and was now starting to make a rally up. So in Elliott wave terms, we have an important low, okay, because that came in at 15-minute support on the 3-minute chart, which is where we are now. This can be defined as an important low. The market is now making an initial rally up. So in Elliott wave terms, this is wave 1 or A, and we consider it to be a wave 1 because we're now looking for the initial correction, i.e. the correction against this initial swing up. But not any correction. We're looking for the correction to unfold as an ABC pattern, a minor ABC pattern. In MTPredictor, these are normally found as TS1, TS3 or TS4 setups. There are setups that find ABC corrections. So let's move forward. Market goes down, and there we have it. The market has now identified for us an automatic TS1 buy setup with a blue buy bar here. So if we right mouse click, select automatic analysis, we can put our analysis on our chart, and even at the first target, a potential risk reward of 3.7R is a good trade. Standard traders will notice that the STF is red. Now normally standard traders will look to trade in the direction of this, so they'd be very wary about buying when the trend is indicated as being down, i.e. red. But for this particular trade, because this is the first correction, i.e. the wave 2, in a new uptrend, any indicator will always be lagging and behind the market. So that's why when we have an important low, an initial rally, wave 1, initial correction that unfolds as an ABC wave 2, we ignore the STF. But what we also do as well is that because we're considering this a wave 2, we don't look for the first target, which is the minimum wave C. We actually zoom out a bit and we actually look for the typical wave 3 WPT, which is actually, if I zoom out a bit, which is actually this green one up here. So we're assuming that the market is not going to stop at the first target, but it's actually going to go up to this higher target where we have a potential trade of a 10R trade. In other words, a potential profit of 10 times the initial risk. You can see the profit here is projected at a potential €3,000 where we're only risking 300. And this is the beauty of the Holy Grail trade, is that we are not aiming for the first targets because we assume this is a wave 1, this is a wave 2, and therefore we're assuming that a wave 3, which is the strongest wave in the Elliott wave sequence, is going to unfold. Therefore that's the target we aim for. So let's move the chart forward, and as you can see the market goes up beautifully straight through our first target, straight through our second target. Remember, we're assuming the market's going to go up to the typical wave 3 WPT, therefore we don't consider a TS4 sell here. Plus this TS4 sell is against a blue STF, so we'd ignore it anyway. But we are assuming the market's going to go up. So if I zoom out and then move forward a bit further in time, you can see, oops, sorry, I clicked the wrong button there. Market goes up, and here we are at the first target. So at the first target, there was a potential profit of 10 to 1. Now, can you see how good these trades are, in that because we are getting in on the first correction off the initial move off an important low, we can assume this is a wave 2, and therefore we're aiming for a wave 3 into at least the typical wave 3 WPT. So at the very least, this would have been a 10R profit. Now, the trader can either decide to bank a 10R profit at that point, which is very good, or you can look to, as your long 2 contracts here, which is our automatic position sizing, perhaps take 1 contract off, or you can then revert to the standard trade management guidelines, which is you look at the STF. So here the STF is strong, in other words it's beyond the strength barrier, sorry, the strength line here, therefore you can look to use the ATR stop, which is our blue dots, to run the trade from this point on. So using the ATR stop, we keep on going forward, we keep on going forward. As you see, the market just keeps on going up, keeps on going up, keeps on going up, until we're actually stopped out right here. So let's put the risk reward on at this level. So the risk reward at this particular level, which is where we'd be stopped out using the ATR stop, is actually 17.9 to 1. In other words, almost 18R profit. 18R profit. Just think about that for a minute. It means that there's a potential profit of $5,300, euros approximately, all after a €300 risk. In other words, a return of potentially 5,300 euros, only risking 300 euros at the initial outset. In other words, the profit is 17.9 times greater than the initial risk. So this is why I go on about these Holy Grail trades, because they're such fantastic trades, because you're getting in on a potential wave 2 correction, is then setting you up for a potential wave 3 rally, which in Elliott wave terms is the strongest and longest in a completed 5-wave sequence. And as you can see, this is exactly what unfolded on the 3-minute stacks just yesterday. So all traders in Europe should have managed to get into a trade like this and had a profit of actually or approximately 17.9R, in other words 17.9 times the initial risk. And that's what's so good about these, is particularly when you use correct position sizing to make sure your risk is small and under control, these profits can be absolutely huge in relation to the initial risk, and that's why the Holy Grail trade, as I call it, is such a fantastic setup, and one that I look at myself and I encourage all traders to use as well. But the point being is that MTPredictor makes it very straightforward to find these, because we had our 15-minute support zone on the chart in advance. That gave us an indication of the important low. We then had the initial rally, wave 1. We then had the initial correction, wave 2, and then the automatic setup that came in and got us into the trade. We then played for the typical wave 3 rather than the first targets. When it gets there, you make the decision to either bank profit or look at the STF. In this case, the STF was strong, therefore run the trade with the ATR stop right up to the top here for an absolutely fantastic trade of approximately 17.9 times the initial risk. And that's why the Holy Grail trade using the MTPredictor software is so brilliant.